Reports are coming out that Iran just struck another oil vessel in the Strait of Hormuz. This is causing oil prices to jump, and that's going to cause mortgage rates to jump as well. But that's today's headlines. We want to take a look at what's coming down the road, because if you're looking to buy, you're looking to build, maybe you bought that house and you're trying to figure out where mortgage rates are going to go from here. That's what I want to explain to you guys. So today I want to show you, mortgage rates are going to take a pop today because of this attack, but where are they going to go long term? So folks, my name is Dan Frio. I'm the host of Rate Update. I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for almost 40 years. I'd love to help you out. And after this video, if you need some help, maybe getting pre-approved or maybe looking into refinancing, I'd love to help you out. I'll give you all my information at the end of this video. But here are for these. So let's get to it. So here's what happened today. We had Iran, they came in and they bombed another oil vessel, and this is causing a spike in interest rates. So if you doubt me on that one, let's get over to this chart I like to start each day with. So if you're new to my channel, I like to start each day with the chart. Now, this isn't a good chart. What you have to understand is that number up through there. That's all you really have to understand. This is the price of a bond. So if the price of the bond is going down, if it's red, that means mortgage rates are going to go up. So if the price of the bond is going up, that means mortgage rates are coming down. And the bigger the number, well, the bigger the adjustment. So minus 18 is going to cause mortgage rates to bump up a little bit today. But let's look at the data that's coming down the road, especially the servicing inflation. That's the number one culprit that the Federal Reserve has its eye on right now. The chairman of the Chicago Federal Reserve, he came out last week and he said the servicing inflation is the number one concern. We know the unemployment numbers are fantastic. We got the unemployment number last week, came in at 4.2. Historically, that's low. We got the GDP, it's at 2. That means the country's growing robustly. But then we got that pesky inflation that we're really fighting. So let's get over to look at the economic news we have for today that's going to give us some insight on where manufacturing and servicing inflation is. And this might give us some relief. So here's what we want to look at. Servicing PMI, that's the first of the chart. Anything over 50 means that it's in expansion mode. Well, we're at 51.2. Last reading, we were at 51.3. So I'll give the servicing PMI, I'll give that a thumbs up. Now you have non-manufacturing PMI. Well, again, anything over 50 is good. So 54, I'll take it. Well, here's the concern that people had, but this might relieve some of these pressures. So if you look at non-manufacturing prices, okay, the prices of things, the last reading was 71.3. They thought it would drop to 67.5, and it actually did. It dropped to 67.7. So this is telling us the prices on the manufacturing side, they're coming down, and they're coming down quite a bit. So could this actually make inflation down the road lower? And the lower the inflation, the better mortgage rates are going to get. So let's get over to see where these numbers look like. So if you take my head out of the equation, here's what we're going to look at. ISM manufacturing prices, they were skyrocketing right through here. From December all the way through mid-year, those prices were on a rally. Where are they doing now? They're actually coming down. So this is the encouraging piece of the puzzle that we have right now. So servicing numbers just came in, and they actually came in lower than expected. That's fantastic. So let's get over and see what the markets are doing. But the first thing we do for there is I look at oil, because oil is telling us basically where the markets are going. If you have oil up, that means inflation's up, and that means mostly equities are probably going to be down because this is bad for corporations, and you're going to see interest rates going up as well because it's inflationary. So let's get over to see where the markets are taking us. So if you go to pre-markets, we got the Dow Jones still on a tear. It's up 200 points at yet another record high. But let's look at the S&P and the NASDAQ. The NASDAQ's down 300 ticks. So we're going to pay attention to that, but at least the Dow Jones is up right now. So let's get over, you might be thinking based on this, oil's up, everything's okay, looking okay. What's the Federal Reserve going to do? Or what am I expecting rates to do from here? Because we get a number that's on inflation that's pretty good today. It looks on the manufacturing numbers, but we had oil spiking from here. Could it go back up to $120 a barrel? Well, what am I advising my clients? What's the Federal Reserve advising people? What's Kalshi actually predicting? So let's get over to the prediction market. Kalshi right now is saying, okay, let's get down through here. There's going to be a rate hike before 2027. There's a 47% chance. Oh, look at that. Before July of 2027, 59%. That's pretty good odds there. And then before 2028, a 73% chance that the Federal Reserve will hike rates So if you're sitting there, you're like, okay, I wanted to buy that house. Well, this isn't good news. Let's get over what the Federal Reserve's expecting, and then I'll give you my expectations of where I'm telling people to do. So if we go over to the Federal Reserve, in 22 days, the Fed's going to be meeting, and I don't know if you know, but we have live events every time they meet. Because this time they're going to come out, they're not going to cut rates, they're not going to do anything, but it's what they tell us afterwards. So in 22 days, the Federal Reserve's going to meet. What are they going to do? Well, there's a 75% chance the Federal Reserve is not going to do anything because the federal funds rate right now is 3.5, 3.75. But then at the meeting after this, they're going to hike rates. And there's almost a 50% chance they're going to hike rates. And then from there, they're just going to say they're staying steady at those higher rates from there. So what am I advising my clients? You might be out there and you might be saying, Dan, okay, I'm getting a house under contract. Are rates going to spike once again? Let me tell you what I'm advising my clients. So if you've worked with us and we've already got you pre-approved, you're probably in a good position because when we pre-approve you, we usually pre-approve you at least a rate at about a 25 basis points higher, like a 0.25% higher than where rates are that given day. The reason is because this might happen. You might have the Strait of Hormuz closing down, oil prices ratcheting back up, and you might see mortgage rates jump. And I don't want to put you through that. So if you put a house under contract now, we're going to lock you in right now today. But you might be saying, okay, Dan, I'm looking for a house. What are they going to do next month, 2 months from now? I'm building. What are they going to do by the end of the year? Well, I'm going to be at odds with Kalshi, and I'm going to be at odds with the CME FedWatch tool. I'm saying the Fed's not going to cut because here's my analysis. Inflation's going to come down as oil stays relevant and where it is at point. But the wild card here is Iran. If Iran does this once again and strikes an oil ship, causing oil prices to ratchet up, we're going to see oil mortgage rates ratchet up as well. So, but my expectations are this. I'm expecting the war to conclude here soon. And from there, oil is going to start to tumble. And it's going to take inflation, servicing, PMI, and everything down with it. And that's going to be good news for homeowners and home buyers. So that's my expectations. You might think I'm crazy. Let me know your comments down below. But you might be a homeowner out there saying, Dan, what do I do? I've been watching rates and they got low and I missed it. Or maybe I have a lot of debt. Does it make sense to refinance? Both of those questions are relevant. I want you to do me a favor. Go over to our Stand store. It's down below. Everything is free. These are calculators to show you how much you can afford if you're looking to buy that first house. Does it make sense to refinance? But we have a tool right through here. It's a debt consolidation tool. It was created, and actually it uses AI to help you understand, does it make sense to turn in that low mortgage rate to pay off those credit cards? Or maybe you could get a home equity loan that maybe solve this equation for you. Or maybe you don't have much debt and you see these programs that we have that, you can pay off your house in less than 10 years. It's there. So these are all the things that we can help you with. But this one right through here, it's going to help you if you're buried in debt. Put your information in there and it'll help analyze you and it'll tell you exactly which program is best for you. And if you need some help with all of this, you can reach out to me. My name is Dan Frio. I'm actually the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. And this is our slogan. One application, one credit pool. We're going to compare your loan with 30, almost 40 different lenders. And you might say, okay, why? Okay, the reason why is, do you realize all these lenders have different rates? Different programs. They might have a special going on with, if you're looking for down payment assistance, one lender might have it. They might have a special on rates. So these are things we can help you find. Otherwise, you're on your own. What are you going to do? You're going to put your application in there, bankrate.com, Lending Tree sells all your data. You get everybody pulls your credit, ruins your credit, gets back with you, and you don't really even know which one's best anyways. So let us help you. If you already got a quote out there and you want us to analyze that with all the lenders we have, upload it right into here, the loan estimate review tab right through there. But if you're drowning in debt and just want to see if it makes sense to do this, hit the debt relief tab there. But if you want us to watch, just monitor your rate and your payment, plug your mortgage information right into this. It's Rate Watch 2.2. We're going to monitor your rate and your payment. So when they drop to levels you want them to, we'll call you, text you, and email you. We don't sell the data, folks. It'll be me reaching out to you. So that's me. That's what I do. But let's go back and see where the chart is. And this isn't good news. Okay, so the MBS is down 19 ticks today. That means mortgage rates will be going up just a little bit. They're not going to be going up much. If you look at today's rate at 6.59, it might jump all the way up to about 6.6, but that's about it for today. So hopefully now you learned a little bit more about what really affects mortgage rates. How do you get some help if you're a new home buyer or if you're a homeowner, where you can also reach out to for somebody to help you monitor those rates and also help you make it make sense Is it a good thing to refinance? We can actually walk you through step by step by step. So that's it for today, folks. Hope you enjoyed it. Hope you learned something. Other than that, I will be back tomorrow morning at the opening bell to let you know exactly what's going on with these and the news behind it that is affecting these things. So thanks for watching. God bless. Have a fantastic afternoon. I'll see you tomorrow. Bye-bye.